Hi there, and welcome to another episode of The People of Private Capital. On this episode, I'm speaking with Michael Richards, who is Head of Institutional Services at JTC Group, a global player in the fund administration space. We talk about the importance of partnership when it comes to choosing fund administration services. We talk about the changing landscape within fund administration, and we talk about Michael's journey to heading up the institutional services practice at JTC Group, as well as some of the fundamentals that JTC follow as a fund administration player in the global sector. I hope you enjoy this episode. So sit back and welcome again to the people of private capital. Okay, Michael. Well, first of all, thanks very much for joining us here on the podcast. Um, it's been in my mind for a while to get you on here because we've spent most of the episodes really since inception talking to general partners and other participants in the ecosystem. But actually, fund administration, it's one of those things that, we work with a large subset of clients. 70-80% of them work with fund administrators, and I haven't spoken to a fund administrator on the podcast. So I'm delighted to have you on. Welcome to the people of private capital.
Thanks for having me, Freddie. I'm excited to join you on this conversation.
Yeah, yeah. Well, great to have you on. So, Michael, for anybody who thinks about fund administration and kind of the broader requirements, the administrivia associated with working through private capital funds in particular. I know you guys work with a number. JTC, to my mind, is probably one of the premier providers globally. I've had the opportunity to work with you and your team. So full disclosure, we're working in multiple clients together. But for people who, first of all, uh, haven't come across JTC before, would you mind just giving a quick summary of what you guys do and where you're focused?
Yeah, thanks, Freddie. Again, pleasure to join you today. JTC is a global professional services firm. My area of the business, we focus on funds and fund administration, but we also have a large private trust division as well. So we can support clients that want to create trust and manage those trusts as trustees. But on our side of the business in fund administration, we're a global service provider. And since joining JTC via acquisition in 2020, it's been tremendous to be able to have that global firepower behind our domestic business. So we're located in all the right jurisdictions that any client may need servicing from. So when you think of that, whether that's the Channel Islands where we're based, Jersey and Guernsey, Luxembourg, Ireland, Singapore, Hong Kong, and of course Cayman, if we're trying to do offshore here in the U.S.,
Mhm.
along with our U.S. offices in Boston, New York, and St. Louis.
Right. Yeah. So I mean, really a truly global player. And you're based in Boston, Michael. Love to for the audience to understand a little bit more about you and your background. From the early days right through to JTC, that acquisition of NES, bringing you into JTC. Just a kind of a summary introduction so people can, get to know you a little bit better. Would you mind just giving us a little bit of color on that?
Absolutely. If I had my dream, I'd be flying a plane right now. I started my college career off trying to be a pilot,
Oh, wow.
and
Okay.
I got my pilot's license and spent 2 years doing aviation training. When I realized that, yeah, the salaries and the lifestyle of pilot probably wasn't conducive to having a family and so forth. So I switched over to business. It was a business degree. And started my career with IBT here in Boston on the fund accounting side, and spent 8 years with them. State Street came in and acquired them in 2007, and spent another 10 years at State Street, really building up my career. At
Mhm.
State Street, I was part of the financial reporting team, handling Boston and Toronto. And at that juncture, in the late teens, and everyone started offshoring, follow the sun model, and the product started becoming fragmented.
Mhm.
And we saw client service not become the priority for clients. And so in 2017, I made the decision to leave State Street and come here to JTC, to really build out a domestic product here in the US that was different than what all of the large competitors were doing in the marketplace in terms of following the sun. And so
Mhm.
we built here in the US from the ground up a domestic only fund admin service, so that when our clients are meeting with us or talking with us, it's all based in the cities where we live. So that's Boston, New York, and St. Louis. And that
Yeah.
was purposeful, right? To drive something that was different to the market, versus clients waiting 24 hours to get a response. Um, and then with the JTC global firepower behind it, it just made it that much easier to build a brand where we could service clients domestically if they had US or Cayman products, but then also offer them the real support. And when they want to go global, whether that's they need an AFM service or pre-marketing in Europe because they want to test out the market, or if they really want to launch a fund, being able to go right to Luxembourg, to Ireland, and be able to get those European investors into their portfolio.
Yeah. Yeah. And I mean, one of the things that kind of struck me, my first exposure to the fund administration space was actually with NES Financial, and it it struck me that you guys were advisors, as much as being a service provider, were really key advisors to what at that stage was a relatively early stage fund. And how important is that? If I'm an early stage or an emerging fund manager right now, how beneficial is it to start talking to a fund administrator like JTC at those early stages, in terms of, yeah, not just how the fund is structured, but also some of the operational practices that really need to be in place in order to satisfy regulatory oversight and ease that burden of the kind of administrative process.
It's extremely important. And really, what you're looking for is someone that wants to be a partner with you. Especially when we think of emerging managers or managers on fund two, maybe fund three, they're starting to raise 100 billion, maybe 200 million because they have a little bit of track record. It's
Hmm.
making sure you have the partner that can help you guide you through all the other service providers you need. Especially with emerging managers, back office is generally lacking. We have great idea people and great maybe portfolio people with connections, but the back office or the front office on their end may not be as robust as it needs to be. Um,
Hmm.
so we do a lot of partnering with our clients where we can support them with recommendations and groups that we know that are well in the CFO for hire space to help them on the front end of their office, making sure they have good controls and oversight over the work that we do. Although I feel like we provide a great service, there still is that need of check and balance on the client side. And so finding a partner that can really support you and help you grow so that you can focus on the areas that you know well until you have that emerging manager built, back office built correctly.
Hmm.
Working with someone like us, I think is extremely important. Not all fund admins offer the same level of partnership. Some um, because they're following the sun and that there are broken down services, you don't get that same level of boutique style that emerging managers need. And where we can bring both the boutique style with the global presence is a unique place in the market for us. And it's served us very well. The growth that we've had from two people in 2017 starting this business to
Hmm.
having 100 plus in three cities across the US has been a great journey for us. And we're looking to continue to expand and grow the JTC brand globally as well as here in America.
Yeah. Yeah. No, it's been great to see, and tremendous team. Just a quick interlude. I'm Ferdy Roberts, CEO and founder at Asset Class. And at Asset Class, we provide software solutions for the front, middle, and back office of firms like yours in the private equity, venture capital, commercial real estate, and broader private capital markets. So check us out at assetclass.com. We'd love to talk. Now, on with the episode. And if I was for the uninitiated or people who aren't familiar with fund administration services, um, can you break down, let's say, the key services that somebody like JTC offers to whether you're an emerging manager or maybe a more established manager um, that is managing that administration in house? What does it look like if I come to you as a potential user of your services? What kinds of um, questions are you asking of me as a fund manager? What types of services are you able to kind of put on the table for me to, start to get some economies of scale, perhaps reduce my operational overhead, or simply improve the quality of service that I'm offering to, to my investors?
Yeah, I like to always break it down probably into three pillars. And again, at 10,000 feet, so high level, but
Mhm.
we break our service down to those three pillars of investor relations. So making sure we're supporting our clients in onboarding their investors, whether that's AML, KYC checks on their behalf, processing of subscription documents, hopefully via electronic purposes, working with companies like Asset Class to automate that. um,
Mhm.
and it's the entire investor life cycle over that fund. So if we're talking a traditional private capital, maybe it's a 7 year with a couple of year extensions. It's the entire life cycle, not just the onboarding. Onboarding is important because we need to get them onboarded as quick as possible while they're engaged for our clients. But it's also the ongoing communication. So that's capital calls, that's distributions, it's the annual audits. If they're taxable U.S. investors, getting them their K-1s at the end of the year, probably their most important document.
Yeah.
Everything else doesn't matter, I think, sometimes, except for that K-1 with our client. And
Yeah.
so that falls all within sort of the investor relations component, making sure the investors are happy, they're getting the right communications at the right cadence, uh,
Mhm.
and just making sure they're happy so that they continue to invest with our clients. Second pillar being traditional fund accounting, NAV, net asset value calculations. So that's your
Yeah.
nuts and bolts. That's your day-to-day accounting, whether that's expenses of the fund, to expense accruals, um, calculating the NAV on a monthly, quarterly basis in private capital. Depending if it's
Mhm.
open ended or closed ended, we might have monthly or quarterly reporting. It's
Yep.
calculating the full NAV, the allocations down to the individual investors, producing capital statements when a sale or a realization event happens. It's doing the distribution and the waterfall calculation. That sort of all fits within that one pillar of just NAV accounting. It's pretty broad and wide ranging, but that's a good synopsis of what fits in that bucket. And then
Mhm.
lastly, your audits, your financial reporting, whether you could do unaudited quarterly financial statements, but every year having your audit. And we play an integral role there between our clients, their third party audit firm, and us as the third party fund administrator. We generally run those audits on our client's behalf, working with the audit firm, making sure all the PBC lists are closed timely, any aging items are addressed, and then ultimately putting together the full financial statement, including the notes to financials. So, although the auditors are issuing the opinion, JTC is owning the Word document and the actual notes to financials and presenting that and processing any comments that may come through. So, from a high level, those would be the three pillars that it fits in. But where we can also support clients outside of those three pillars, when we think of global presence, if you have offshore investors, maybe there's CRS reporting or FATCA reporting, depending if you have a foreign based feeder fund or foreign based fund, economic substance reporting. There are a multitude of different pieces that we can reach out to our global counterparts to fill that in for our clients when they're doing products that are not just US or Cayman based. If they're going
Mhm.
into Luxembourg or Ireland, maybe there's an AFM needed or a depository needed in Europe. We can bring in those colleagues and those services to support them as well.
Yeah. 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 I mean, you mentioned there's a couple of things I pick up on there. The first is the partnership component because, and the second is the entire life cycle of the fund. Both of which, if they're done correctly, are long term. I mean, the nature of these investments, you could have a PE investment that's 7 to 10 years long. I mean, funds obviously lasting longer than that. So I would imagine that the selection of a partner in this field, really on both sides, is important. Is kind of the first thing, and I think the second is, um, there is a life cycle, and there's the onboarding, and then there's the servicing, and then there are key dates throughout the year, as you mentioned, tax season, and reporting for the fund, etc. All of which need to be administered and managed, and the complexity of that. You guys take that away from the client or support them in it. Um, but I wonder, to what extent do you feel clients appreciate exactly how their clients' relationships are going to be impacted in a positive way by having that kind of partnership in place? Um, in other words, you're an extension almost of that brand to their clients, and then conversely, how challenging that can be if it's not done correctly. I mean, how do you guys view that? Because it is very much a life cycle. So when you're evaluating potential clients, that must be something that's in the back of your head as well.
Oh, absolutely. If partnership isn't probably one of the most important aspects, clients always like to come back to price,
Hmm.
right? At the
Yep.
end of the day, price does matter for them in terms of making sure they're financially viable themselves. But at the end of the day, to me, the partnership within a client portfolio manager to their third party admin is probably the most important
Um,
because when they launch Fund One, maybe they're launching a $50 million domestic private credit fund or a private equity fund. It doesn't matter.
yep.
That's what they know. And that's maybe their seed investors or some friends and family or some trusted advisors they know. But it's really once you get beyond Fund One and you've proven yourself, that's where the partnership really takes effect because when you're raising a domestic only fund and you have, 30% of your raise already soft circled when you launch them because it's friends and family and trusted advisors, and you start to reach out to that third party network, whether it's, institutional investors or retail investors and the new rules, not necessarily rules, but the new way of reporting on
Hmm.
those retail investors, custodians, and making sure that you have a firm that's flexible enough that can adapt with the market, especially with smaller funds. There's a little bit more bespoke practices needed to be able to support them versus your institutional players raising 500 or $1 billion. Those investors have their own sort of ILPA requirements, and that's a very well established part of our industry. But on the lower side, when that becomes a little bit more cost prohibitive to go to the ILPA reporting standards, it's making sure what can we find in the middle that services both the clients, their investors, but also their future. And that's where a partner really plays into it because we can start with the service level that meets them at their infancy, but grows with them over time.
Yeah.
And then when we talk about the life cycle, I mentioned all our foreign jurisdictions, but the uniqueness that JTC brings because we have a lot of different offerings under our umbrella. Think of the end of life, right? Maybe you have
Hmm.
an asset that's just not able to be sold, right? It's just not the right
Yep.
time to sell it, but it's the only item left in your portfolio. To maybe you have some litigation happening. We have a company called FFP within our world that can service clients, that can come
Hmm.
over and take over a fund if there's an issue with funds and become the GP, or they can take an asset on and structure a vehicle for them to basically continue that asset with those investors, but allow them to move on to the next fund. So
Hmm.
when you work with a firm like us, it's the intangibles we bring of the other services. We
Yeah.
provide a great product in the US and we're very competitive, but it's when you start looking at us globally and what we can bring to the table on a global scale that really sets us apart.
Yeah. Yeah. And speaking of a global perspective, and it may not be day one that that's part of the plan for GP, but I guess you are asking them to take a look at what could potentially happen over the next decade, and be prepared to evaluate potential partners as to whether they can check those boxes. And some of that certainly we're seeing. I'd be interested in your perspective as funds look outside of the domestic US, as you mentioned, perhaps creating feeder funds in other jurisdictions. Um, First of all, how do you service clients like that may be looking to tap into a European base of capital, for example? And secondly, if they do that, to what extent can they work with you guys to, to define or refine a structure that is compliant in each of the regions and meets the regulatory bar in those regions?
Yeah, when we're chatting with new clients and we're deciding whether or not they're the right firm to bring on to our platform as well,
Yep.
right? Because
Yep.
it's really when you're going through that with an emerging manager, it's both groups interviewing each other to make sure they're the
Yep.
right fit. And a lot of those conversations that you just said are really understanding not necessarily where they see this fund going today, but trying to understand what is their long-term vision. And what I like to ask a lot of clients when we're interviewing them and going through that sort of phase is where do they see themselves in 5 years? Do
Hmm.
they have aspirations to be $1 billion fund? Now, what
Yep.
we're looking for is that, yes, they have those aspirations. Now, what we realize is what is the odds of someone getting there in 5 years from emerging manager? It's low, but it does
Hmm.
happen. But we want to understand what their real goal and their business plan is to make sure they're the right fit, um, and make sure that they have those aspirations to really grow their business. Because that's really a proven point to make sure they have the right, pipeline to be able to
Yep.
support that. Because anyone can go raise $1 billion, but if you can't invest it wisely, you're not gonna make the returns that those investors are. So really what I'm trying to probe into is understand what is their pipeline of deals, and can they support that? Not necessarily can they raise it, because
Great.
at the end of the day, you can have all the dry powder you want, but if you're not deploying it correctly, it's not gonna matter in the long run for your investors and their returns.
Yeah.
Uh, and so as we have in those conversations with the clients, it's really when we think of Europe in particular, just because of the AIFMD, the regulations there, and people not understanding how they can get in trouble. They think, hey, well, that person reached out to me. I can use reverse solicitation and slide by the rules.
Hmm.
That may work in certain individual situations with an investor, but if you're truly raising a fund, and you want to be compliant and not risk running afoul of regulators in Europe, having an AFM in Europe is the most important. So the
Hmm.
Alternative Investment Funds Management Directive (AIFMD) is the regulation that covers Europe, and an AFM, an Alternative Investment Fund Manager, is really how you can then raise capital. So JTC, both in Ireland and Luxembourg, offers pre-marketing to our clients. So if they don't have an investor base in Europe and they're really looking to grow their business by bringing in European capital, they can essentially, for lack of better terms, rent our AFM or contract with us as an alternative investment fund manager. There are some regulatory rules around that. We won't get into that detail today. But
Yep.
ultimately, for short money of about 15, 16,000 euros, they can have 18 months to go test the market. And we'll
Right.
connect them with distributors in the market and help them try to raise capital. But ultimately, it's a short cost for them to test out the market. And after any time during that 18-month period, if they determine there's enough appetite for their product, we can then help source them the fund and put the fund together, pulling together lawyers in either Luxembourg or Ireland, pulling the team together. Because not only having the AFM license, but you might need depository in Europe, you
Yep.
know, things like that. So we can pull that whole toolkit together for a client so that they can easily launch their product over there, whether again, Luxembourg and Ireland are the two main areas that people launch, but you may also want to go into whether it's Jersey or Guernsey for a specific reason.
Yep.
Now, there's a lot of nuances why people choose each jurisdiction. But ultimately, it's that investor appetite is what's going to guide you into the correct location, and we can help them through that discovery process and find the right location that makes sense for them.
Yeah, yeah, that's great. And that presumably that vehicle helps kind of passport into the other, the broader European region if that's where they want to, as you say, test the waters for their fund.
Yes, without getting into specifics, in general, when
Yeah.
they sign up for what we call pre-marketing or renting the AFM on
Hmm.
our side, there are regulatory things that they need to comply with, and we need to comply with as the service provider. So we do track their meetings and make sure we're keeping the regulations in mind as we service them. But ultimately, yeah, it allows them to go across all of Europe and market that. And there's many different strategies. If you only have one or two countries, there's different other regimes that we could service them via in order to solve that. But the blanket approach with the AFM is probably the most successful for our clients versus going into individual countries and trying to register individually.
Yeah, yeah. And on that topic, Michael, I'm interested in, let's say, at a trend level, what you're seeing in terms of fundraising. It's obviously been a very tough, you know, fundraising environment for various sectors over recent years. The last, 18 months to 2 years, let's say. Um, what are you seeing in terms of new fundraising efforts? And are you seeing kind of green shoots of recovery? Or are you still seeing resistance or challenges in the fundraising environment? Just interested in your kind of macro level view.
Yeah, I mean, the industry definitely still, well, let's start with IPOs, right? The IPOs have not been as robust as I think everyone was hoping 25 would be. So that sort of is the tip of the iceberg, as they like to say, right?
Mm-hmm.
To free up more private equity capital, free up VC all the way down through the chain here. That definitely has not rebounded, I think, as much as the market would like to be able to recycle capital all the way back from PE down to VC. But overall, our business has done very well in 2025, probably well above market here in the US. And I think a lot of that goes back to just the partnership and the fact that our clients are recommending us to their friends, their people in the industry. And that's
Mm-hmm.
been our biggest pipeline is really just by word of mouth that um, JTC may be newer in the US. We've been here 5 years now, but it's not the longest tenure. And
Hmm.
so it's been building that brand and getting those referrals, which is nothing better when you get a client referred in from another client. So we've done very well, but overall market sentiment definitely is still a little muted. We are seeing capital being raised, but not at the level that clients would like to have seen at this point in 2025. Still been a little bit tough just without the recycling of capital.
Yeah.
Areas that, of course, that are just still um, very hot, private capital.
Mhm.
The amount of private capital leads we have coming through the door to the new signings we have definitely is nice to see that that's continuing to move on. We'll see what effect interest rate cuts may have here in the US in the future. How much of this is a permanent capital raise now and staying away
Yeah.
from banks? I think that's the piece that everyone feels is going to stay in the long term. But as we know with everything, it's cyclical, and we'll see how hot private credit stays in the
Yeah.
3 to 5 years from today. But right now, private credit still is as hot as it was 3 to 5 years ago when it was first kicking off its run that it's had
Yeah.
since 2020. The private equity side, we're seeing a more of a resurgence in fund of funds, and I don't
Mm.
know if that's unique and that we just happen to find those right candidates and our uniqueness of the asset size of our fund of funds business, because of our acquisition 4 years ago of Sally Fund Services and their 35 close to 40 billion hopefully by the end of the year of fund of funds
Right.
that we service. And so we've seen a really good uptick outside of Sally this year in our fund of funds business, and a lot of that comes back to again just the referral base of our existing clients on that side. um, That one seems a little unique, unlike private credit, because I haven't seen fund of funds come back that much, or really people moved away from 'em, because of the double, fee structure there
Yeah.
sometimes. But it's been interesting on our side that we've seen a large, resurgence there. And then for us, being a very large real estate, fund administrator, um, you know, the green shoots of the Opportunity Zone 2.0 that has
Yeah.
just been passed, that we see, late 26 and 2027 being a real runway for us, to really grow that business. We have about 75 Opportunity Zone funds today that we service, so probably one of, if not the largest player there. So that's very interesting for us as we look to the future. Unfortunately, Opportunity Zone 2.0 may have muted the market a little bit here through 25 into early 26 until the new rules take a place
Yeah.
in 2027. But it's exciting times for us because we have such a large share of that market, and we're interacting with all the best players in that market. Um, so those aren't necessarily green shoots; those are regrowing of original green shoots that built
Yeah.
our business. We're real excited about that.
Yeah. Yeah, that's great to hear. Yeah, I mean, seeing certainly similar things from our clients and indeed prospective clients that we're talking to. Do you see much by way of family office engagement in those fund of funds, or the kind of multifamily office space becoming more prevalent in your client base, or
We
not?
do. It's interesting. Family offices, multifamily offices definitely seem to be, pairing up or opening up their network a little bit
Yeah.
more over the last couple of years, and really trying to figure out, the best of breed between themselves versus just working on their own. I'm attending the family office real estate event next week in Denver, and it's 50, 60 family offices, multifamily offices getting together to really strategize around real estate, in particular for that one. Um, but there are many of those events throughout the year, and we're really seeing, without having, a true industry initiative that we're aware of at this point within multifamily office and single family offices, but we're
Hmm.
seeing the willingness to work together, has improved over the last 3 years, and we're seeing a lot more collaboration. And yes, that has led to really, a resurgence from that side of the market in the fund of fund space.
Yeah.
Um, just different family offices having access to certain, and investment firms, and be able to share that and raise, what they're collectively, supporting those investment managers and investments is helping them get to different tier levels of expenses, and they can share in that together.
Yeah.
So that's been exciting and has really helped that fund of funds market, for us in general.
Yeah. Yeah. No, it's exciting to see. So, at a macro level, Michael, just want to kind of switch gears here a little bit. Um, I mentioned at the outset we have some experience of working with you guys, and a number of other fund administrators. But one of the things that stands out for me when working with the JTC team is how invested, personally people are in the business and managing those client relationships. And the more I've learned about JTC over the years, the more impressed I am with the way that JTC runs its business. And I wonder if you could shed some light on. I've heard reference to the various eras that have existed and the new era that JTC has recently entered. Can you shed some light on what that means and I guess how it impacts how the team conducts itself and how you're growing as a business?
Yeah, absolutely. And part of that, and I'll get into it more with my response here, it's really a lot of the secret sauce behind what JTC is as a brand and what we are as a global, powerhouse. And it comes back to our CEO, Nigel LeCain, when he, spun off from a law firm many years ago. We won't say how long, just to not age him. Um, his goal was to create this entity, which is JTC globally today, that has every employee having their hand in the success of the company. And he
Hmm.
did that by creating an employee benefit trust years ago. It's taken over many different versions, between being private to having private equity investment to now being a publicly traded company on the London Stock Exchange. But the core brand behind this employee benefit trust is really what keeps us all engaged because we're all shareholders of JTC from day one when you join the company, whether you're a college grad to an experienced hire. Everybody is part of the employee benefit trust. And that ties into our eras in that both as a publicly traded company, keeping the street abreast of where we see the company going so that we continue to grow our market share, both
Hmm.
from our client base, but also our share price. And keeping that industry, keeping the markets aware of where we're trying to head and then meeting those goals, which of course will drive market price. We set a general eras. And so
Hmm.
currently we're in year 2 of what we're calling the Cosmos era. And
Hmm.
ultimately, at a very high level, that is letting the street know that over the next 4 years that we plan to double our business. And there's other metrics. I'm going to leave it at top line revenue. There's many other metrics that go into that, but
Yep.
ultimately it's doubling the business. And we're letting the street know that we expect it will take us 4 years. And here's our plan, both organic growth and inorganic growth, of how we'll get there. And ultimately, that employee benefit trust is tied into that so that as we double the business, and I'm using very simplistic terms saying that,
Yep.
uh, the employee benefit trust will then mature. And ultimately, every employee of the company will be granted liquid shares in JTC upon the completion of an era.
Yeah.
And so keeping that very high level, what does that do? Well, that drives engagement, not only from the staff, but engagement to how they handle their clients, where they're now a shareholder and have direct input into the wealth growth on their own side. So that drives our partnership. It also drives a very low turnover rate for JTC.
Yeah.
We are less than 5%. It's probably somewhere in the low fours on the last 3 years for turnover. When you think of fund administrators globally, it's probably closer to 15% or 15% higher turnover rates. It's a very commoditized business, as we all know. And so, this employee benefit trust and the brainchild of Nigel LeCain, our CEO, has really given JTC um, a leg up in terms of just pride in the company, pride in the service, and making sure we're all marching towards that same goal, which is client service, making sure clients are taken care of the right way, and then their growth will ensure our growth. And that's really been a pleasure to experience over the last 5 years of being here at JTC. And it's something I'm looking forward to in the next 10 to 15 years of my career because it's really provided a great service to our clients and not only just our staff. And it's unique enough that in 2019, Harvard Business School actually published a case study on the employee benefit trust. And every year, Nigel comes over and has to present that in October to the entrepreneurial class at Harvard Business School. So it's
Great.
constantly being challenged by the next group of students coming through that master's program. And it provides great insight to us as a company to take back and think about what each group says every year and making sure this EBT plan, as we like to call it, is the right thing for the market. And every year it's only strengthened our resolve around this and strengthened Nigel's resolve that what he's built was the right thing for JTC to support not only our clients, but to support our own employees.
Yeah. Yeah. No, it's clear to me just in engaging with the team, and indeed I've heard it from other members of my team. The quality of interaction. I think it's clear that you've got well tenured employees dealing with your clients because it's rare. If a question comes up that one of your team can't very comprehensively answer it, and I think if we hark back to our earlier conversation about partnership, your partnership with those clients, it is long term. Having people around for the long term, I think, is really important and a key differentiator in my opinion. Um, just on that topic of differentiation, and you mentioned it just in passing, in your comments just now, there is a perception that fund administration is a commoditized market, and that if you were to think, be cruel about it, you might say it's kind of a race to the bottom if people are just looking at price. Like, it's a very challenging market. Margins are constantly under pressure. Differentiation is challenging to achieve. I think you guys have done a phenomenal job in terms of standing out. Um, but how do you respond to that type of observation? And given that it's certainly in some markets it clearly is, people are just competing on price. But how do you guys think about that, and how do you stand out from the pack as a result?
Yeah, I think it's probably one of the things when we're talking to emerging managers, they hear their friends that may be more successful in fundraising or bigger funds or came out of larger shops, and they just assume, well, that will just happen. Anybody can do it. Well, yes, anybody with Excel and Word can do it technically, but do you have the right risk and controls, risk appetite? Do you have the right controls in place? Do you have the right framework around that? Because at the end of the day, your investors are entrusting you with their life savings sometimes, right? To
Yeah.
make sure you're doing the right thing. And that's where a partner like us brings that little bit of extra, right? We really care about, making sure the investor has the right visibility into what they're investing, whether that's via e-subdocs to CRMs, right? Things like that that aren't as commoditized as, say, just the capital call and distribution notices and getting, um, the daily nuts and bolts completed. But how do we handle that commoditized piece and
Yeah.
wrap that into a whole program that takes the investor from first subdoc viewing, signing it, all the way to liquidation of the final sale and realization? It's building those services around there so that the communication, the education of the investor is top notch, because that's what's going to bring that investor back if they feel informed. So we're working with our clients. What are you doing for your quarterly write-up? What are you doing for your annual report? And not just focus on delivering the financial statements and the K-1s, but guiding them on what they should be communicating to these investors to keep them engaged so that they're getting a differentiated service from our clients to their investors. But not only that, the full life cycle of their involvement with that client, and taking away some of, yes, we can bring in tools to commoditize certain pieces, but you also have to have the right knowledge and understanding of the market to be able to make sure those tools are evolving. AI, as we know, is completely changing the way everyone looks at fund admin. How are
Hmm.
we staying on top of that? Are we protecting our clients and their investors' data correctly? Because AI can be powerful, but it can also be terrible if we put in the data into the wrong models that are public.
Hmm.
So making sure the right risk and controls are around that. And it's everyone wants to get there fast, but when we're dealing with investor sensitive information, we need to take a very pragmatic approach and make sure we're building something that's future proof here. Um, and so that's how we address it. It's really taking that risk averse approach and being pragmatic with those decisions so that we're building something that works 3, 5, 10 years from now, not just something that's following a headline around AI and how we're doing it. And that's how we can take the commoditized market that people see fund admin is today to really providing a level of service that brings them something that they didn't realize they needed. They thought they
Yeah.
just needed a NAV and a financial statement, but how do we bring in those intangibles? And a lot of that is our ability to retain talent and be able to repeat that year over year so that the conversations are had with the same client service director, the same associate director, the same senior manager. When we look across our team here in the US, on average, people have worked for us now for 15 years plus.
Yeah.
So every director on the team has been with JTC or the management team of their offices 15 years plus. And if you think of that, those are three acquisitions coming into the JTC fold. Normally, what you'll see is a large turnover at the top after a couple of years. And the JTC culture fit so nicely with our NES financial culture, with our other acquisitions, that the continuity of service 4 or 5 years out after acquisition, and the senior management team still being engaged, still growing the JTC brand, is unmatched really in the industry. You don't see that generally.
Yeah.
And that's a real testament to the culture that JTC has built, and why we've been successful.
Yeah. Yeah, it is. I mean, it's certainly very clear to me that you guys have a great team there. There's a great team spirit. I wonder. You did share with me in a prior conversation that you coach youth hockey, right? And I wonder to what extent does your experience at JTC help you in youth hockey, or does your experience in youth hockey help you at JTC?
It's probably youth hockey helping me with JTC. Uh, dealing
Right.
with, unruly, um, young, boys and girls on the ice, with a
Yeah.
lot of equipment on and no fear, and trying to
Right.
teach them to be risk adverse in that ice, because they can get really
Right.
hurt. And you have
Yeah.
to teach them the right way to play the game, the right way to handle themselves on the ice, the right way to handle, even referees. So when you think of that, how does
Hmm.
that translate back into business? Well, it's how do you handle yourself within, the floor here, right? Working with
Yeah.
your colleagues. How do you handle clients when you deal with a client that may not be happy? How do you rectify that? You translate that back to how do you handle a referee you might not have liked a call, you might not have thought he or she made the right call. But how do you channel that into the right energy? No one should ever be
Mm.
yelling at anybody, especially these officials out there today that, you know, that they are, doing God's work, I think, sometimes when in any of these
Yeah.
sports, dealing with parents on the sidelines, right?
Sideline.
Never mind the kids
Yeah.
inside the lines. But how do you translate that to your work life, right, as they get
Yep.
older? And that's what I taught my kids as we were going through sports. Sports is really about teaching you about life. I can think back to a time in my life where my older son, he got cut from the top team and he was on and moved to the second team, and just understanding the aspects of disappointment, of rising to the challenge to get back. He rose to the challenge to get back to the top level a year later. And just teaching those life lessons that sports teaches kids, so that when they get to business, those life lessons are there. And that's that same thing. It's the adversity of being in the office. Is it competitive for the next promotion, within your own team? Yes, right? But
Yeah.
just because somebody else gets promoted doesn't mean you're not doing a good job. And it's those ebbs and flows of youth sports and teaching these young boys and young girls, the right way to handle themselves in between the lines translates so much well into their business career, especially when they're fresh out of, university, and trying to learn how to grow. There's a lot of parallels there. So I definitely think those young, men and women on those youth teams I've coached
Mhm.
over the years have taught me a lot more how to handle a team, and how to handle clients and adversity, a lot more than the other way around.
Yeah. Yeah. Well, I can tell. I mean, dedicating your time outside of work to something like that is hugely admirable. One other thing that again, I remember you mentioning this in the past. I wonder if you could maybe share a little bit of detail around it. But I understand yourself and your wife founded a charity back in 2017, something like that. Is that right? Yep. And that's something you dedicate time to as well. Can you share any information about that? Just some insights.
Absolutely. My wife Kelly and I, proud parents of 4 children,
Hmm.
3 boys and 1 girl. Unfortunately, our youngest son, Cooper, was diagnosed, at about 20 months old with a rare genetic disease called GM1.
Right.
Um, it's a genetic, unfortunately, neurodegenerative disease. He was diagnosed, like I said, at 20 months of age. Unfortunately, passed away in January of 2017, from the disease. But our community here locally was such a great support for my wife and I and our kids going through this. And they raised some money for my wife and I to handle medical expenses and things like that. And at the end, when Cooper passed away, what that little man taught us in 3.5 years was nothing short of a miracle.
Yeah.
And we took that money that people had raised for us for expenses where we didn't need it, and we seeded a foundation called coopstroop.org.
Right.
Uh, and Coops Troop supports kids with life limiting conditions and special needs globally. We have a large partnership with Boston Children's Hospital here in Boston. That was a great support for us. And we do a lot supporting families in need coming through Boston Children's, but also through other organizations throughout the US. So any child with special needs or a life limiting condition, we're always willing to help or look to see how we can help or partner with other foundations. But yeah, that's been over the last 8 years. The pride and joy of my wife and I to make sure we keep Cooper's memory alive. We love talking
Hmm.
about him, love talking about him on here
Yeah.
because he was only with us for 3.5 years, but he taught us more than anything we've come across so far in our lives, and we're grateful for that.
Yeah. Well, that's inspiring to hear, and we'll put a link to the website in the show notes, and be happy just on behalf of Asset Class to make a donation as well. But it's something that in my dealings with you, and I've known you, Michael, probably a decade plus at this point through various roles. That just become, you get you get a sense of the person, and I think not just you as an individual, but the entire team at JTC has been, an absolute pleasure to work with because you are dedicated and you're giving people, and you kind of what you see is what you get, right? Which I think is really important. And you deliver on your promises, right, for your clients. Which I think if you're looking for a fund administrator, for anybody listening to this, JTC is by far and away our number one recommendation. So but that's because of the people. It's not because of the service, or as you say, that the administrivia of the fund is part of it, but actually having the people there who care about the job, who care about the long term relationship with that client. Um, that's what's really important, and you guys have it in spades. So delighted to be able to work with you guys on that. Well, look
Appreciate
in
that. And we enjoy working with you, seeing the growth of asset class over the years from the first conference, I think, or was it the Convene in New York?
Yeah, that's right.
To where you've grown over the last 3 years plus.
Yeah,
It's been exciting to watch as well from our side.
yeah, I
And
appreciate
now
it.
being able to partner together with you with a handful of clients and a growing client base between both of us has been really exciting.
Yeah,
Because I think our two products really complement each other very well.
yeah,
And we're starting to prove that in the market.
yeah, yeah. No, it's exciting times. Well, look, on that positive note, Michael, I appreciate your time today, and we'll put a link to your LinkedIn profile. Is probably best if people want to reach out to you. Is that right? Yep.
Perfect.
Yep.
Yes.
And of course to the jtcgroup.com website for anybody looking for fund administration services. We'll put that link in there as well. But for today, Michael, on the People of Private Capital podcast, thanks very much for your time. It's very much appreciated.
Thanks for having me, Freddie. Have a good day.
Great.